So we are recording. Dexterity, we are just going to be going over a couple of your lessons as we've done previously. The way that we started it was we always referred back or referenced back to the course itself, right? To the lessons. You have at this point completed the core, and you have started on in the foundation. So our objective today is to go through the foundation to test your knowledge and your awareness of that market. But before we do that, we just want to go through and do a quick review of the things that we've learned in the core. So what I love about this course is that everything that we learn, everything that we do, it builds on the previous lessons, right? So the way that the course starts off, by talking about the breaches in the market, right? It talks about the breaches, it talks about the trading universe, it talks about the territories, and then it goes over those core concepts. So when it comes down to that, the breach is the foundational piece of the puzzle, right? It's the first step in everything, because once we can identify the breach, we can also identify the territory and we can identify the whale through that process. So as I come into the market, just kind of scrolling and looking at these things, I can quickly, since I've trained my eye, I can quickly come and see, where the breach is or where the territory is or where we're currently trading. When I do that, I would probably put this line just about in this area right here, right? This would probably be the area that I would be looking at. The reason why I say that is because this is an area where the market hesitated over and over and over again. We were able to approach this level multiple times, but every single time we came to this level, we had a rejection at this exact same level. We were not able to break through at this level, right? So as we can see here, the market has approached this area 5 times, right? 1 time, and it bounces off of here. 2 times, and we get what is called like a probe, where it does break below, but it doesn't stay below, right? It probes this area, but it doesn't breach this area, right? We get another pullback and we get a test again, okay? So we've got 3 tests over here, 3 tests in this area here, and then we come back and we do the exact same thing again, and we get another test of this area and price breaks. We get another test of this area and price breaks. All of these things are showing us that this area is so strong and so important, right? But now, as we continue to look forward, what we see is we see this candle. This candle here would be considered to be a bearish engulfing candle, right? It's an engulfing candle. It engulfs all of these previous candles. Everything that's going on in these areas are completely engulfed by this candle here. But not only does this candle engulf, but it also breaches this area, right? It breaches below the lows that we have previously defined. So if this was the floor, the way that I like to look at it as, think about this being like a house, right? The house has 2 floors for this example, right? This is the second floor. We're on 1 floor of the house, right? We're on 1 floor of the house. This candle, when it breaches, it takes us to the lower level. So now we just went from upstairs to downstairs, right? We just went from upstairs to downstairs. This candle in itself is extremely, extremely important because it provides to you not one piece of information, but it provides to you a number of different pieces of information, right? So the first thing is it breaches this level. That's the first thing. The second thing is it talks about the trading universe and we talk about the territory. Within the territory, we talk about the whale and we talk about the candle that started the move. All right. We also talk about those probes and things like that, but let's focus on the whale. This candle here, the candle that was strong enough to breach this level is what we consider to be the whale, right? So we're going to mark this right here as the whale, right? The whale is also going to show you the territory that we're trading in. So essentially, when it comes down to this whale, we are now in a seller's territory because we took out the candle that started the buy side move. these big buys that were coming in, this candle took out this trade. So for me, just from this trade alone, just from the information that we've collected so far, this is how I would register this in my mind. I would say I'm looking to sell this market, right? If we were able to catch these sells, that would be awesome. What I typically look for would be a retest, right? I want the market to pull back. If we break below a level, right, I want to do something like this. Let's say that we break, and then let's say that we pull back to this level, and then we continue on from here, right? This would be my ideal entry into the market, not on the initial break, because we can get probes on the initial break, but I want to enter on the retest of the level that was breached. I want to get in as close to this level as I possibly can. All right. So those are all amazing things. Sometimes if we're looking at this on the 4-hour time frame, it may look like one straight move. But if we were to go down to a lower time frame in this same area, we may see where price pulls back. In this example here, I don't believe that we actually have a pullback here. I think that this price literally just falls straight through and it just continues on to the downside. So what you can see that I've done is I've gone from the 4-hour time frame all the way down to the 30-minute just to see if we actually did get a retest of this level, right? So what I see is that we did not get a retest of this level. So when I tell you that I look personally for the pullback, that's when I would be entering the market. That pullback did not come. So when it comes to this initial move here in the market, right? This initial sell, personally with my strategy and what I've learned from Corey, I would have missed this sell. I would not have entered into the market when this originally breached. It happened too fast for me, right? I don't want to just enter it because there is a possibility that it fakes me out and pulls back. So that's not the information that I'm going to take from it, right? What I would want, again, is I would want for price to, once it broke through here, to pull back to this level here. But what we have to understand is that it does not have to pull back right away, right? It pulls back within its timeline, not within our timeline. So now that I am in seller's territory, I also know the candle that started the move. If I were to take a trade, my stop loss, so my protective stop would be right above the candle that started the move. It would be right above this guy right here, right? So when I go ahead and I measure this out, my stop loss would be right above there. And I could make it as tight as I can, but it would be right above here, because if we take out this guy that started this move, we're now in a buyer's territory, right? We took out the guy that started this move, so we're in a seller's territory. That's how those territories would work. Yeah. But for me, what I'm looking for the opportunity to enter into the market. What I see here is I see this this level here. This level here is going to be important to me. I may take like a rectangle, and I may take like something like this and capture this area right here to where I capture, you know, the body of the candle. If you see, this is the body of the candle. And this is the wick of the candle, the wick of the candle, the wick of the candle. I was able to capture all of these things, just defining, I'm literally just defining my my zone, right? This could be my supply or my demand zone, right? So let's see if I were to pull this aside. So essentially what I'm looking for in order to enter this trade, because I now know that I'm in seller's territory, I'm only looking for opportunities to sell, right? I'm only looking for opportunities to sell. Again, if price were to break back above here and then maybe retest in this level here, I would look for my opportunity to buy back into this zone. But unless that happens, I'm looking for sells. right? And the perfect sell for me would be if price were to pull back into this level here and then continue to sell from there. So let's continue to move forward. Let's move into the future and let's go slowly and see if price actually ever comes back up there. We see it kind of consolidates in here. It pulls back, but it doesn't actually come back into our zone yet, right? This could be what we consider to be a complex pullback, as we'll discuss in just a moment, because price does pull back, but until we take out the seller, the whale that started the move, we are still sellers, right? So as I pull this to the side, I actually see that the market pulls back into this zone. It does eventually pull back into our area here, right? I told you, I don't want to enter the market until price pulls back into this area to retest the breakout, right? Here is where we see price broke out below the low. We have these wicks here. We have this seller's candle here. Price has to come back into this area. As we spoke about this this past week, Dexterity, and you did a great job in your analysis as you shared that with us. For every seller in the market, we need a buyer, right? If I have a product or a service, if I'm selling books, or if I'm selling iPhones or whatever the case may be, let's say that I'm selling iPhones, right? And with this iPhone, I'm the seller. I can only sell it if I have a buyer to buy the iPhone from me, right? And on the opposite end, if you are the buyer, you can only buy it from me if I'm willing to sell it. So for every seller, there has to be a buyer. And for every buyer, there has to be a seller. The way that I explain this, or that I like to think about this, is I like to think, we like to seal business with a handshake, right? We like to seal business with a handshake. When you go into business with somebody, you might do the documentation and put it on paper, but at the end of the day, you want to shake hands and say, yes, we are now in business. This business deal has been done. So when I look at buyers and sellers in the market, I might look at, let's give it a couple of examples. We have sellers that come into the market here, right? But guess what happens? Who are they selling it to? The buyers have to come into the market to match the sellers. So for every seller, we had a buyer, right? If we looked here, for every buyer, we had a seller. The market mirrors itself. It mirrors itself, right? Because it has to come back. The market has to come back to the point to where the selling began. If we think about this selling right here, I also like to look at any wicks or candles like this, that came before the selling, right? Like this. This is a wick that came before the selling. For me, this is the handshake that needs to happen. I need for the market to come back into at least this area right here in order for that deal to be done, right? When we think about it, look how precisely that came back in. It could have come all the way back to the top here to match the body, but it simply came back to the wick, the previous wick. I could have taken my sells at this point here. So through this is only the first lesson, the first courses, but this is when you put all of those things together, right? When you put the breach together, when you put the territory, the universe together, the universe above as well as the universe below, when you put the territories in it, when you go ahead and talk about our probes and our whales, these are all just the first concepts, the core concepts that we get started off with. Of course, we talk about swing trading and day trading. That's going to go ahead and that's going to talk about the time frame that we're taking our trades on. Right? So if I'm a swing trader, I'm going to be taking my trades on the 4-hour or the daily. What that means is that my stop loss is going to have to be bigger, but my profit will also be bigger. My stop loss will be, again, above the highs, right? It'll be above the highs. And we can see there, that's about 90 pips. That's a little bit big for what I'm used to. But what that comes with is, it comes with those bigger reward trades, right? It comes with those bigger reward trades. For me, in this trade, I probably would be out of the trade maybe right about here. The reason why I say that is because the price might have sold down into this level here. But when I started to see these bullish engulfing candles, I may stay in the trade. But when I see this bullish engulfing candle come into here, me just knowing myself, I'm more likely to secure my profits, right? And to go ahead and say, you know what? I'm going to just secure my trade. So in that, what we see is this actually turned out to be a 1-to-3 risk to reward ratio trade, and that's the trades that we look for. Risking $1 to make $3 is the ideal trade. But look at this. If you are patient, this trade actually had a much higher potential, all the way down to about 800 pips. If we held this entire trade, it became a 1-to-8 risk to reward trade. And guess what? Once it retested this area where the breach occurred, price never came back to that point. We were selling this market the entire way going forward. It's an amazing, amazing thing. This is the amount of knowledge and awareness that we gain with just the very first course here, right? With just the core. But we're here, we've gone through the core, we understand the core. We want to move on to the foundation, right? Let's hop into that, okay? Before I do that, the last thing is, if you see this, and I'll open it up for questions before we jump to the foundation, but if you see that, we did have other opportunities to sell this market as well. Even though this may be the bigger trade, we had opportunities to enter the market here as well, right? We could have entered here and still had a very good trade, right? We could have entered here and had a very good trade. All of these trades are opportunities for us to enter into the market, right? And as you see, the smaller it got, the smaller the risk became, even though the reward becomes smaller as well. But these are all amazing opportunities to trade. So as we're going about our process, even if we were to miss our opportunity initially, when we miss our first opportunity, the market gave us another chance, right? So we don't ever have to rush. We don't ever have to force it. We don't ever have to feel pressured by it, because the market will always give us another opportunity. If we were able to enter here, and if we didn't enter here, we would be able to enter here. Because me personally, I probably would have missed this trade, if I can be honest. This first opportunity, I would have probably missed this one, because I would expect for price to pull up maybe a little bit higher to test the body of this candle. It didn't do that. Now that I see this rejection, what I like to see is I like to see that candle pull back in. A lot of times what we'll get is we'll get a full body candle to come into the wick, right? That wick, we normally get a candle that will come back in here. That would be my opportunity to enter the market. So I would have got in on this second pullback here, and we would have taken the trade at least to the bottom, at least to this level here, right? I always try to take my trades to the bottom of the move. If you want to actually also be able to predict, and we'll get into this, this is actually getting into the core, the foundation right here. I normally will take an equal measured move as my first target, right? So target one, I would measure from the candle that started the move to the bottom of the candle where price started to reverse, right? I would take this and I would clone it. If you right click, you can clone it. And I would go ahead and I would have an equal measured move to the bottom of this level. So this would be my take profit one right here, right? An equal measured move right in here. And as you see, this is exactly where price came into. You know, we came up a little bit short on here to where it almost touched, but then it rejected. But this would be the equal measured move. If you can see it, after this equal measured move had finished, and maybe I should have drawn it to like right here. Maybe that would be better. It would be a little bit shorter. Oh, let me do it. I'm going to just actually show that to you. Let me measure it out. So if I drew it to this first area before we got that pullback here, and I right click and I clone it and I draw it from where the new move has started, it actually brings us perfectly into this level here. So that's a little bit more precise, right? Now we get this resistance to where price breaks here, it touches, and then we get the pullback. After that initial equal measured move, oftentimes we'll get a pullback into this area here where we now retest and we continue to sell from there. But that's basically, those things sum up the core concepts, right? And from there, we want to move into the foundation. Before we do that, I want to just take 2 or 3 minutes and I want to open it up for you to see, do you have any questions for me, or does that pretty much fall in line with your understanding that you currently have at this point?
Yeah, absolutely. It falls right in line. Even I so much have more understanding, clear understanding of what I have learned before. So what you are just explained to me now, it's an addition to me, and it's I really enjoy it. I really enjoy it. So
I'm glad to hear it. Your understanding as you described it, and you you know, as you explain these things, were completely clear. It was so clear to me that you know exactly what it is that you're talking about. Now you just have to practice identifying these things, just scrolling through the market and looking for those areas where price sits at a certain level, and then where we get the breaches to the downside, because oftentimes price will come back, which it hasn't come back on this one yet. But we'll just go through and you just go through and practice it, right? And just practice it and practice and practice until it becomes easier for you to see it for yourself. But let's go ahead and continue on. I won't get too far off track, but let's go ahead and continue on. This one was just so easy for me to see, and I'm glad that we were able to find such a good example so quickly. We could see like different levels like this could be a breach as well, to where price pulled back and then we got the sell, then we got another breach. Like those are things that we'll be able to see. And the more we practice, the better it is, or the easier it is for us to identify those things. But let's go on. So we've completed the core. Just off of the core alone, you can become a successful trader. Just off of the core alone, you can become a successful trader. The foundation, however, is what we can actually use to build off of that understanding, right? The foundation is where we actually come into understanding the candlesticks, right? The 4 phases of candlestick momentum, the wicks of the candle, the close of the candle. These are all going to be highly important subjects, right? So what I'm going to do is I'm going to kind of quiz you, right? I'm going to quiz you, and I'm going to quiz you on the 4 phases of candlestick momentum, right? So the 4 phases of candlestick momentum, you know, as we defined it, you can see that, of course, as we look at our time frames from 15-minute, 30-minute, 1 hour, 4 hour, each one of these candles, it doesn't matter how big or small that candle is, they all represent 4 hours. But the fact is that the size of the candle may represent a different level of strength or significance. So if we were to look at a candle like this, or let me go ahead and see the 4 phases. I might need a little bit of a refresher. And now this has actually inspired me to go through all of these courses again for myself, because just like I told you, these are not lessons for us to go through one time. These are lessons for us to go through over and over and over again. So we've got the highest momentum, we've got high momentum, we've got medium momentum and low momentum. You know, just looking at this, you know, it's pretty easy for us to see. If I were to look at a candle, let's say I look at a candle like this one here, what would we say, what kind of momentum would we say comes with this candlestick here?
Yeah, I can say it. Let me say, okay, it's a high momentum.
Let's look at
High
this,
momentum candle.
this candle right here, this blue candle right here. What kind of momentum would we say comes in with this blue candle right here? Would we say that's high momentum?
Yeah.
We're gonna,
yeah.
okay.
A small body and small wick. Okay, it's a medium momentum. It's a medium momentum.
Small body,
Small body and
small wick.
small wick.
We may have a medium momentum candle, right? This may be a medium momentum candle. So what that means is that this medium momentum candle, as we see it here in the market, and let me go ahead and clear up that annotation, we'll clear all drawings, perfect. This medium momentum candle, it didn't have enough momentum behind it to turn the market in the opposite direction, right? So the medium momentum candle following, you know, this larger candle here, what kind of candle would we say that this is? Would this be medium momentum, or would this be low momentum, or would this be like a high momentum candle, or maybe the highest? What would you say?
Which one, sir? Which one?
This red candle right here.
It's the highest. It's the highest.
I would agree with you on that. I would definitely say that this is probably the highest momentum candle, right? It's a bearish engulfing candle, large body, small wick, right? Large body, small wick. So this is showing me when we see these highest momentum candles, if we think about momentum, momentum carries energy, right? And as that energy continues, or as that energy is exerted, the movement normally continues, right? So as we see this highest momentum candle, we see this highest momentum candle to the downside. Oftentimes that energy will continue, as we see here, right? So we see those things. It doesn't always, like, we're not just going to take trades off of one thing or another, because you can see a high momentum candle or the highest momentum candle, and it still may not stand up. It still may not work, right? Like in this example, this candle here, this bullish engulfing candle, I would also say would represent the highest momentum candle that we can see. But on the opposite end of that, it was a probe. It wasn't a full breakout. It probed this area, and we immediately got a rejection that came back into this level here, right? So this would show me that, you know, we're not just going to take it just off of the candle alone, but the candles are important. When it comes to this candle here, what would we say that this candle represents? Would this be the highest momentum candle, or would this be a medium or a high momentum candle, or would it be a low momentum candle? What do you think?
I can say it's still the highest, because the body is still large and the wick is not that too large. So
the wick isn't too big.
Can be is okay. Yeah.
We might say
Let's
this
see.
one would be somewhere between the high momentum or the highest momentum. I might consider this to be the high momentum candle, because we do have a little bit of a larger wick compared to this one here. You can see that this wick is super small. You almost can't see it, but this wick itself is a little bit bigger. It shows me that this is a high momentum. A high momentum candle is still a very good sign, right? It's still a very good sign. We've got a high momentum candle here as well, which sends the market lower. We've got a high momentum, and on these selling candles, these bearish candles, it's good to see the wick that we're looking at the top of the candle, right? The wick we want to see at the top of the candle, because what that represents is it represents as high as the market wanted to go, but it was rejected, right? For something like this is a little bit different because the wick is at the bigger wick is at the bottom. So it shows us that we were selling, but the market may have started to become exhausted at this level. So when we're buying, because see, we have a candle here. This could be high momentum or a medium momentum candle. We do have the push, but we have that wick at the top. It means that we pushed into this level and then price started to reject from here. In addition to that, this is also a candle that represents a retest of this breach. So this was the breach. Remember, we look for that retest. This was the breach. This was the retest of the breach. As you can see here, we tested these lows. And then this was the continuation to the downside. So I could have entered the market here as well, to the downside, right? So those are some things that we'll want to go through. I'm going to be going through these lessons again in the foundation because I see, like, as I'm looking over it, I got to kind of jump back over there and just see it for myself. So I'm going to be looking at this again, you know, just to, wow, this is amazing because this is actually where the market is right now. So I'm going to show you something really cool that I just noticed. So as we see, this candle was a medium momentum candle, right? This candle also, we could say this is the candle that started this new move that took out the low, right? So this candle here, it also created another imbalance in the market, right? It created another imbalance in the market. There's an engulf here. So in our same exact lesson, right, we have to have, for every buyer, we need to have a seller. And for every seller, we need to have a buyer. So essentially from there, what we can also say is that in this candle, if price comes back to this level, because I like to trade using if-then statements, right? If the market does this, then I do that. So if the market comes back to this level, I would like to take the trade. I would like to take the trade at about this point here. So when I pulled this off to the side and I continue to pull it off to the side, we do have where the market, it did kind of pull back. As you can see, it doesn't always pull back exactly to that point. That's why I always like to look at these, like the wicks, right? Oh, what am I doing? I always like to look at like the candle as well as the wicks that surround the candle, right? So what I did was I captured these wicks and this body. And when I pulled that off to the side, I still didn't get my touch at that level there. So it's a possibility that we do come back into this area before getting the sell. But I did kind of see this selling come in, you know, after the market tried to pull back into this level. But this would not be a trade that I entered at this point here. Even though I see the pullback, it would not be a trade that I entered. It does kind of create a, you know, a 1 to 2 risk to reward trade, with the risk being way too big for me. You know, I'm looking for 1 to 3 at all times. So I wouldn't have taken this trade, but if the price does come back into this level here, this will be a trade that I consider taking. Even if price turns from where it is right now and pulls back to this level, I might be considering an opportunity to enter into this market, right? That would be a possibility for me. All in all, on the 4-hour time frame, I'm not looking for any buys until the candle that started the move is taken out. So I would want to see this break through, and I would want to see price pull back, and I would want to see a buy at that point here. You know, I want you to keep that in mind. I also want you to consider that what is on a 4-hour, we may see on a 4-hour that this breach, this candle that started the move, has not been tested. On the 1 hour or the 30-minute, we could see something different, right? On the 30-minute, we might say that this is a bullish trend that took out these highs. So now, therefore, this is a buyer's market. So there's a number of different ways for us to look at the market itself. We do have to be open and flexible to that. We have to be aware of, that universe and aware of what's taking place on this chart right now. Like right now, we could say that this was the imbalance on the 1 hour time frame. I hope you noted that I changed time frames on the 1 hour time frame. And this candle has now actually come in to mitigate or to test this candle, right? And at this point here, we could be looking for buys at this point here on the 1 hour time frame, even though on the 4 hour time frame we are looking at sells. Our stop loss and our target, and I know that might have been confusing, so we can go over that if we need to, but our entry might be somewhere like right here, meaning that we would be in drawdown by just a little bit. I might have my stop loss below the low, which is right here below this candle that started the move. And I might be looking to target the highs of this candle, which actually gives me a beautiful 1 to 10 risk to reward trade setup. It's actually a setup that I would personally take this trade just because I love the risk to reward, right? I love the risk to reward. I see on the 1 hour, we have started to make higher highs and higher lows. We have this high being higher than this high. We have this low as the peak, and then we have higher lows from here. So I can see price, ooh, that was wrong. I can see price buying, from this level. Maybe it comes into here, maybe it rejects right here exactly where it is. That's actually pretty clean right here. So this is actually coming in at the intersection of two different trends. I'm not going to get too far into that. That's just my views and what I see at this time right now. I would be willing to take a trade on this pair, depending on where the market's at. So this might be my trade right here. I do see that this low is higher than this low at this time right now, and they're both higher than the candle that started the move. So I've got about a 16 pip risk. I would be willing to take this trade. I'm not going to take the trade. I'm not trading for the rest of the week. I just I'm going to take a step back from actually placing trades. But I could see that. What I would also look at would be if the dollar index, which we'll talk about that in just a moment, that's not actually covered in the course. So let's stick to the course for now. And we'll jump back in. I've got a couple of my own little pieces of information that I use. So that would be the 4 phases of candlestick momentum. Do you have any questions about that portion right here, candlestick momentum and the candles themselves?
No.
Okay, excellent. How and why the market moves, price structure or market structure, the rule for defining a trend, the rules for trend violation, a complex pullback. These are all, this is exactly what we're going over. So we're still on track. So when it comes to the rules for defining a trend or market structure, right? Market structure can be defined in a number of different ways. We might say that market structure or we might find structure in the same areas where price is actually testing multiple times, right? This could be a structure zone, right? This is where price comes into over and over again. I actually want to go ahead and review the course itself, so I make sure that I'm explaining it as it's explained in the video itself. I'm going to be going over these courses over the next week. Through the end of the week, I'm going to go through and make sure that I'm up to date on all of it and I have it sharp in my head. But then we also look for rules for defining a trend and rules for a trend violation, right? So as we define this, rules for defining a trend is going to be defined by higher highs and higher lows in the sense of a buyer's market. But if we're looking at a seller's market, a trend would be defined by lower highs and lower lows, which we have here, right? We have peak low. We have our peak, and then we have a lower low, and we have a lower low. Along with those lower lows or lower highs, along with these lower highs, we also have lower lows. We have a low And then these lows, all of these lows, whether it's here or here, are all lower than the previous low. Then we have it again down here to where all lows are lower than the previous low. It shows us that there is a downwards progression in the market, right? So again, on to the next lesson. How do we now define a trend violation, right? What defines a trend violation? A trend violation to me is defined by a candle that now takes out the low, the higher low. If this lower, if this lower high is followed by a higher low, that is starting to invalidate that trend, right? So as we see all of these things here, and we see again, I'm cleaning this up just so that we can focus on the focus. But as we clean all of this up, we see that we have our high, and then we have a lower high, and then we have a lower high. We have our low and a lower low and a lower low. And as this is happening, right? As this is happening, we can literally take this trade and just we're selling every time, right? We're continuing to sell. Oh, wait, but now, once we get to this point here, it is something that we want to be aware of for a couple of different reasons. What are we seeing happen here? This is the first time that this low did not take out this low. Now, this is a low. And this now becomes a higher low. Yes, this is a higher low because this second low is higher than this primary low, right? We actually also start to see some more bullish engulfing candles coming into this as well. We see some more bullish engulfing candles. This was actually a trade that I took. I took this on the 1 hour time frame to where we actually start to see this engulfing candle. Price comes back in to mitigate in this zone right here. And I'm actually noticing something in the euro. The euro has not been my primary pair. It hasn't been my primary focus. But what I am seeing, but I've been trading it because some of the people on our team, they trade the euro. What I'm noticing is that the euro sometimes turns around, as we were able to see in this area back here, or not even in this one, but this one back here. It turns around. It doesn't always come all the way back in. Sometimes it'll just come to the wick, which is exactly what we had here. Price actually just came back in and it wicked at this level here. So it came close to that point. It didn't come all the way into that point. So how I might address here is, and we did end up coming back into this level. It actually did come all the way back in and it entered us into the trade. But I actually took it early here when I saw price pulling away. But to get back to our point, I just noticed that, you guys, I'm learning as we're going. As I'm teaching you, like I said, to teach is to learn twice. As I see here, as I see here, we did have a low and now we got a higher low, which means since we didn't get that lower low, following a higher low, what I would expect to see is I would expect to see a higher high, right? We got a low, a higher low, another higher low, and it's not until this point where we got the higher high, right? We got a higher high at this point here. This is now showing me that there's a potential for the trend to change. Look at this pulling off. We just marked this up. We literally just analyzed this together. And I said I would take a buy at this level right here. And even in the past couple of minutes, while we've been on this call, prices already started to turn around. We're already getting a buy exactly at the level that we defined it. If we had pushed the button at that point here, we would already be up. You know, it's just about 6 pips, nothing too crazy, but 6 pips could be, 60 cents, right? Or it could be $6 if we're trading with the 0.10 lot, or that 6 pips could be $60 dollars, depending on the lot size that we're trading with. That has happened already. And now we're starting to get a candlestick that is hinting at a reversal in this level here. We would see our take profit one would be at the test of this imbalance. I would expect for price to pull back into here for our first target. Our first target on this trade, if I were to take it, would be 58 pips, about 60 pips. Amazing trade, right? That's a really good trade. If price breaks above here, you know, I might be looking all the way up here for my next target, right? So just in this alone, we might be looking at a much larger trade. This is 170 pips. Anybody would be happy with 170 pips. And then we take it all the way to the top of the trend for 225 pips. If it really does become bigger than that, to where price pushes above and it takes out this, you know, it sits above here, right? We see this zone that we've created. It breaks above here and retests. We might be looking at an even bigger trade at that point here to our next level, or even to take out these highs. So we would simply just be trading zone to zone. We could see this trade pushing all the way into this area here, which this is a trade that will change people's lives. This is a 1 to 40 trade. This is not what I'm saying is going to happen. You know, I like to keep conservative views until the market tells us what it's doing. But that is a possibility as to what we can see, because we may see price actually come and test in on a higher time frame. We could see it go and support, or we can see it go in and test any one of these levels. Any one of these levels all the way into this higher zone here. If this was the case, yo, we are some of the highest level traders in the business, because from this, we would simply just be risking 16 pips to make 700 pips. Unheard of. You know, that's not the type of trade. I'm still trying to build up to that point at this time right now, right? I'm still trying to build up to that point to where I can hold a trade for that long, because I'm really good at getting my entries, but my weakest area in the market at this point is literally just holding my trades and being patient enough, you know, and I'm okay with admitting that, right? We all have these things that we need to grow in, or that we need to develop, right? We all have those things. And that's my thing that I need to work on. I need to be able to be better at holding on to my trades so that I can maximize my profits. That's the next level for me, right? So we never fully arrive. We're always in a process of refining ourselves and refining our skill sets. So let's see what else we would see. Execution zones. Execution zones could be, execution zones could be considered like these zones that we're looking at back here, where we have this entry and I have this entire zone, right? Even though my ideal, I would love for the market to pull back into this level to give me the best risk to reward trade setup, but my execution zone has to be in this entire area here, because this entire area is important. It's not just one point that is important. This entire area here is important. So this would be my execution zone, right? And then from there, I already showed you guys how we would execute using an equaled measured move. Let's see, equaled measured moves. I use equaled measured moves. I learned this here at Driven. I'm so grateful for that knowledge, for the opportunity to learn from Corey, because that's something that I never knew before. So for me, the equaled measured moves are going to be our first targets, right? I'm going to use that equaled measured move, as we saw before, as my take profit one. Oftentimes we might see, people use them as, people will take a smaller take profit, they'll be conservative at 30 to 50 pips or whatever the case may be. But if you're swinging on the daily time frame, you don't need to take profit after 50 pips, right? Or if this is a 4-hour trend, you don't need to take profits after such a short period of time, because you're probably leaving money on the table. So in this situation here, our equal measured move was 400 pips. Wow. I don't know if I would hold the trade for 400 pips, because I just be like, you know what, this money is starting to add up. I just want to take my profits, put it in my pocket. I'm not greedy. I just want to take something, but it's something that I'm learning, because that's what the strategy says. The strategy says to wait till my equal measured move, or to wait till my take profit one. And that's essentially what it could be. There's other ways that we can take profits, if there's like other support levels or things like that at these points. But here, price is pretty smooth. Me personally, the way that my strategy works is I do look at that equal measured move. The equal measured move might be like a take profit 3 for me, and I might take profit at the low, which might be here, and then might be here, and then this might be another one here. Let's see what else we can hop into, because I do want to show you guys something else that I'm noticing since we're looking at the live market right now. Candlestick patterns. This is something that if you guys have ever been on my onboarding calls, what we have is, let's see if I can find it just very quickly. Driven trading resource guide. I believe this is the one. Let's see if that pulls up here for me. This trading resource guide, you guys, is one that is available to each and every single one of you. This is going to be your candlestick patterns or your price action patterns, right? This is not just like a single candle, but these are the price action candles. So these are price action formations that you will see that will direct you in the direction that you should go. So when you start to see things like this happening in the market, right? Those will be the candlestick combinations, candlestick guides, single candlestick formations. This is another one that I would probably have to brush up on this week. But as we go, we always have Corey here that will, when it's open. Oh, okay. So this is essentially what he's talking about. Things like dojis. I'm really good with seeing dojis. I actually see one right here that actually helps us to initiate even our, where was that first trade at? Was this the first trade? Yeah, because I saw let's see. We might see like candlestick patterns like, let's see. For me, this is a single candlestick pattern right here. This isn't a doji, but it's kind of like a hammer. What do they call it? Let's see what else he's got here. That's one. Oh, a pin bar. Would that be a pin bar? It could be a pin bar, but there's a little bit of a wick at the top. What we see is it's like a hammer to me, or hammer formation, right? It's like a hammer that comes in. This is something that I gotta definitely, let's see.
Rejection right there. Here we go once again. Now this is not.
Yep. These are things I'm not going to go too deep on this because I need to brush up on that.
Hello.
Yes, sir. Can you hear me?
No. I'm not saying anything.
Okay. And then we also have patterns like this as well. Things like this kind of always initiate for me. Let me know the direction of the market. And as you can see, these are areas where the market commonly reverses at. If you can see them here and you see them here, right? We see reversals that happen at these points here. We see things like this that could be considered like, it's not quite a doji entirely, but it does the same thing in a downwards market. This is where price reverses, right? We go ahead, we see something like this right here. Like these are like this candle here. These are areas to where it shows me that there's a pull, like it's a tug of war, right? What this shows is it shows that the candle or the market, it pushed up into this level and it pulled down, but then it ends up closing higher here, right? Price closes higher, right? So we've got the wick at the bottom, we've got the wick at the top. So throughout this candle, there was like a tug of war, right? We see the same thing here. There was a tug of war. It pulls to the upside, pulls to the downside. It closes kind of closer towards the middle. Same thing here. Pulls to the upside, pulls to the downside, closes kind of towards the middle. Same thing here. Pulls to the upside, pulls to the downside, closes kind of towards the middle top. Same thing here. Pulls to the upside, pulls to the downside. those are things that we can look at, and we can identify these as areas. This is a doji. This is actually a true doji that we see right here. This is actually a doji as well. So we see, even as this is also a doji as well. So as we see, price is approaching these levels, right? And as price is approaching this level, this is where we start to get these pivots, right? Even before the big one happens, we know that something is going on. So as we train our eye to see these levels, that is going to be a good area for us to focus in on, right? That is a good area for us to focus in on, right in there. And then, of course, I know we just went through a lot of information. We went through a lot of information, putting it all together. You guys, dive back into this. I'm diving back into this. That's my commitment to you guys this week. I'm going to be diving back into the foundation, just to show you guys that this is not information. Again, I keep on saying it. It's not something that we go through one time and we're one and done. We live in these courses because the better we understand it, the better we will do in the market. And when it comes to trading, when it comes to developing this skill set, you never arrive, right? You never truly arrive. It is always a journey. It is always a process. We are constantly always refining ourselves, right? We're separating ourselves from certain things that don't support us. Any bad habits that we may have, we remove them as we start to identify them. And any things that we're doing well, we go ahead and we lean further into those things. So with that being said, for now, I want to go ahead. I do want to show you one more thing after this, but I want to see about these candlesticks, about, are there any other questions that you have for me right now in regards to what we're talking about, defining the trend, trend violations? These are things that I can talk to: the close, market structure, rules for defining a trend, rules for trend violation. A complex pullback is essentially what we looked at a little while ago. You guys, give me 1 second. Give me 1 second. I got a phone call coming in.
All right, sir.
All right. Yeah, you guys, I'm going to hop off in the next couple of minutes here, but I do want to show you one thing, and I want to answer any questions that you have for right now. I know we're right at about an hour for this call, and I think that this will be even a good call to rewatch as well. But what kind of questions do you have for me right now, Dexterity?
Absolutely. I did not have any questions. I don't have any questions right now.
Okay, excellent.
Any question right now. But what I know is that I need to keep getting myself familiar with all these things. So I know that I can understand, as you're explaining, I can understand, but I know that I still need to stay in touch with it often and often to make it sink to myself.
Yes,
so that's
sir.
what I know. So
absolutely, absolutely, absolutely. I think that those are all great things. I'm glad that you're understanding it. Of course, if you have any questions, feel free to reach out to me. And I'm always here to help, always here to assist you. Another thing that I look at oftentimes is, I'm not going to get into this right now. I do look at other indicators or other things I use as a confluence or additional confirmations. Similar to like the dollar index or the DXY. And we'll get into these things a little bit further. I'll give you one thing at a time so it's not too overwhelming. But you guys, and this does look, let's see. This does look like we're testing here. Well, I still would take this trade, but I'm not going to take any trades at this point right now. We could see price. It is still sitting here. We could still see price push, and buy up to this level here. We've got our stop losses below the lows, 17 pip stop loss. Is there any areas below that price could come into? I don't believe price needs to come back here, and I don't believe price needs to come back here. I think we should be all set there. But yeah, you guys, I think that should be good for today. I'm gonna go ahead and stop this recording, and I will make this recording available for every single body, every single person in our group. I'll post it again as I always do on YouTube. I'll drop the recording. And you guys can go back through this. For me, I'm going to give myself homework. You know, I'm going to give myself homework. I'm not just going to tell you guys what to do. I'm going to let you know that I am going to be going through this foundation course again, and just making sure that I have the best understanding, because although I can trade it, I see that I need a refresher in explaining this to you guys. So I'm going to do my own work as well, you guys. We're going to continue to work on ourselves and develop ourselves, you guys. But with that being said, let me go ahead and stop